Everyone. This is the AM edition of Traders Espresso for February 9th, 2018. It's Friday. Let's talk about what happened in markets yesterday. It was another big day of selling. All indices were down across the board. The Dow posted its second four-digit loss ever. Now, in percentage terms, it's not the worst drop ever. The point drop of about 800 and something in the financial crisis of 2007 and 2008 was worse on a percentage basis, but it still is pretty shocking to see such large numbers. Taking a look at the charts, which we'll get to in a second, it looks like there's probably more selling to come. Some indices have kind of settled at the bottom of where I would expect them to find some footing. Others, like the Russell, actually broke through the bottom of their price channel, which that's a concern. At this moment right now, the futures appear to be stabilizing. They were up overnight, turned negative early this morning, and have now turned back around and are posting, some green numbers. The Nasdaq is up. Nasdaq futures are up, about 0.7%. The S&P futures are up about 0.25%. The Russell is up about 0.5%, and the Dow futures are up marginally 0.1%. VIX has come in. VIX futures anyway has come in. It's down 2%. The VIX itself is down 5% at this hour. The dollar index is treading water but still positive. It was up as much as 12 basis points earlier. This is interesting because the dollar move, which I have said in the past was kind of a leading indicator, given the fact that the stock market is, very concerned about future fiscal policy and the prospect of higher interest rates, maybe a more hawkish Fed in the face of an economy that may be overheating. On that note, the government entered a shutdown very briefly. It was probably one of the shortest shutdowns in history. They did vote early morning, and they passed a spending measure, but the spending measure adds $300 billion to government spending. It adds to the national debt, and I can only see this fueling concerns even further that government fiscal policy is inflationary and causing the Fed, who's in control of monetary policy, to maybe consider adopting that more hawkish stance to prevent the economy from overheating, to prevent inflation from running away from us. Remember that, the job numbers, when they came out, showing some wage inflation, which the Fed has been waiting for a while. Now that we have it, it seems to be appearing with a vengeance, and the question has become, what's the Fed going to do to kind of, are they going to panic, or, what are they going to do to try and tamp that down? Asian markets were down also. European markets are down as well, though not by as much in terms of a percentage as the Asian markets were. Still this selling has gone, has kind of followed the sun as it goes around the planet, as it goes around the globe. Although futures are stabilizing, right now, I would expect another choppy day, another rough and tumble day. I really would not expect traders to go into the weekend with any long positions. So I would expect to see another day of afternoon selling, accelerating in the late afternoon, in the last hour or so of close. On Wednesday, we saw the selling really accelerate in the last 15 minutes of the session. We saw the selling accelerate in the last half hour of the session. I don't know if that's necessarily a pattern, but I definitely would expect in the last hour of the day that we're going to see more selling. We're going to see that going on. Now, let's take a look at some of these charts to kind of tell you exactly what I'm talking about. One thing I forgot to mention, all of the S&P, all 11 of the S&P sectors were down anywhere between like 1 and 4%. I don't have the exact numbers in front of me because they reset those for the day. But starting with the SPX, the S&P futures, or the S&P cash market, rather, the S&P index, we see from yesterday's action that the index has traded back down into its long-term price channel. This was one that was drawn on the daily chart. My weekly chart is gone. My weekly trend is gone for some reason. See if the weekly, if it fits the weekly, chart here. But while we're waiting for this to draw, you know, the point I was going to make is that the SPX is traded below the midpoint, and it closed below the midpoint. So I'd expect it to rotate down to the bottom of that channel. I would expect the Russell futures, and I'll get to that chart in a second, actually traded and broke below and closed below the bottom of its price channel. That's a concern. It may very well trade back up today into the channel, which is kind of what it's looking like right now. But if it stays there, who knows? So anyway, from a daily chart, in the interest of time, I won't redraw the weekly chart, but the daily chart anyway shows us that we've traded below the midpoint, and we'll probably rotate down to that bottom area. The Dow traded down and stopped right at the midpoint. So it could conceivably bounce right back up. It wouldn't be surprising if the Dow was positive and other indexes were negative today. You know, we have seen kind of disjointed price action amongst the indices. You don't expect to see them move the exact same percentage amount on a daily basis, but we have seen some pretty wide spreads. You know, with the Russell acting the best, you know, on a relative strength basis. You know, the Russell was down, but it was down by less than 3%, whereas the other indices were down by 3 to 4%. Looking at the NASDAQ 100, the NASDAQ 100 finally traded back down and settled into its price channel. It's been stubbornly resisting that for the longest time. I would expect it to rotate down at least to the midpoint. Okay, if the Russell is leading the way and showing us that the bottom of these price channels is not the floor, then I would expect that NASDAQ to not only rotate down to the midpoint, but also down to the bottom of its price channel. And the last one I haven't looked at here is the Russell. And you can see here, the Russell not only traded down to the bottom of its price channel, not only traded below, which it did on Wednesday, so that's not surprising, but the fact that it closed below the price channel is a concern. That's potentially a signal that that the bottom of that price channel, it's forming a new price channel, and that isn't the bottom, and that the bottom might not be, it might not find a bottom until it hits some point. Could be here, or it could be here. So this wouldn't be too bad. This would not be good. That would be a pretty significant decline. You know, if I were to calculate it as a percentage, I'm guessing somewhere in the neighborhood of a 20% decline. If it comes down here, that would be about, not quite 20, about 16.5. So call it somewhere between 15 and 20% decline. Additionally, I just mentioned that all the sectors were down. I want to add an RS. No, the RSI is already on here. So let's stretch that out so that we can see it better. So this is the energy sector. The energy sector traded down into oversold. Materials sold. Touched oversold. It had touched it, traded out, traded back in. Industrials did the same thing. Consumer discretionary is one of, I think it's 3 sectors that are not yet oversold. I believe that has to happen when, I think it's healthcare, I know it's information technology, and discretionary. I believe they need to rotate down into oversold territory before the sell-off is completely done, and we can start, flushing the unhealthy, weaker players out of the system and resuming our move to the upside. Consumer staples sold back in, or went back into oversold. Healthcare just touched it. Financials, so actually it's 4 sectors. Financials almost touched it, but did not break into oversold. Telecommunication, now it's 5. Sorry, telecommunication services have not broken down into oversold territory. That, I believe, needs to happen. And utilities continue, they remain in oversold. And then real estate. So you can see that we're making progress on the sell-off, but some sectors just have not traded down into that oversold territory, which, like I said, I believe needs to happen for the sell-off to be complete. So that's pretty much all I've got. You know, like I said, it's going to be a rough and tumble day today. I would tread with caution. If you have that shopping list assembled, you know, maybe you might start to nibble at some things, but tread with caution. I've said this yesterday, I'll say it again. If you have any, and if any of the stocks on your shopping list are in the tech sector or in the NASDAQ 100, I would wait until we have evidence that the tech issues are done selling, because I don't believe that they are. So that's all I've got, and you know, good luck today, and I hope you all have a good trading day.